So if you are selling your business, you're selling real estate or some other asset class, there is a way that you can really take advantage of this, kind of quote unquote tax loophole to defer these capital gains taxes until even 30 years down the road, while actualizing, about 93.5% of that cash value up front. So we're going to talk about that here as the episode goes. We did a video a couple weeks ago. We'll go ahead and drop the link below, talking about Biden's tax plan and kind of what that meant. And kind of the primary driver on that video was what capital gains taxes are going to look like. Well, recently there has been, folks that are trying to avoid those cap gains or the short-term cap gains tax. What can they be doing that will ultimately offset those or delay them for something down the road, or what measures can they take to ultimately avoid them altogether? We're going to talk about that today because as of about a week or so ago, they came out and they said that they were going to do retroactive or potentially retroactive capital gains taxes, which would have been from the point of the announcement of that bill, which would have been April 28th. Now, every other tax plan from this administration would not be beginning until January of 2022. So it kind of smells and sounds a little weird that they're going to take it retro back to April, but I think it's because, this entire tax plan by them and this entire platform is predicated on getting additional taxes. Well, if there are loopholes, and of course legal loopholes, we're never going to talk about, illegal actions on here, but yeah, there's tax codes out there that allow people to offset some of these capital gains or delay them or even cancel them out in many instances. So I think that there were so many rumblings about that now they're talking about doing a retro on it. So we really wanted to put this video out. We wanted to do it sooner, but really wanted to research some tax codes and ultimately land on what we think is a vehicle that will allow you to kind of get the best of both worlds, whether you're selling, a business, you're selling real estate, whatever the case may be. So one of the things that, I've been researching, and folks that are in my circle that I've been talking to, a lot of financial advisors, this really stunned them, caught them really off guard as far as a retro cap gains tax on this bill would be. So normally, when things like this happen, they've got months to prepare by design. They'll do yearly planning, typically right around tax time. They're talking about doing it much sooner this year because of specifically this retro and the cap gains. So Biden's recovery plan really has called for a larger capital gains tax on wealthy individuals or people just selling assets in general, and really targeting corporations as well. So their entire tax platform, this entire recovery plan on their behalf is counting on these additional taxes. If there were a tax deficit because people are moving money around or taking advantage of these loopholes, this could certainly fall like a house of cards. And again, we're going to post that video below so you can take a look at my breakdown of Biden's tax plan. Obviously, there's hundreds and thousands of pages of it. Just to be clear, I did not read all of those, but I did read the tea leaves on them, and there were a couple things that really stood out. I think that video will give you kind of a good head start, and then maybe circle back into this one to kind of connect some of the dots. So a lot of investors out there are looking at this right now, and they're thinking to themselves, and I'm included, so I'm in this boat with everyone else out there trying to determine whether or not and when I should sell off on assets if I deem it would be necessary, or I would want to get my cash value out of it at that point. So a lot of people are looking at even delaying sales until further down the road just to see kind of what that wait and see approach, see what happens. Maybe they even wait until the next administration comes in. There's obviously no one's got a crystal ball. We say that a lot on this, but it's kind of that wait and see approach. Well, I'm not going to take on cap gains taxes of over 40%, on an asset that I have kind of groomed over however long amount of time, however many months. For me to take a 40+% hit on capital gains taxes and only get, let's call it 60 cents on the dollar that I worked hard for, or even passively for, that's not good in my world. So what I've done is I've done some research on y'all's behalf. I've found a couple specific ways where you can defer capital gains tax, but one that we've recognized that we think could be a really good fit is called a monetary or a monetized installment sale. So there's a way to offset or cancel out even capital gains taxes on an asset that has obviously appreciated. So you can not only defer your capital gains tax for many years, but you can also get the actual cash on a percentage of that up front. So with this specific vessel that we're talking about here, or this instrument, you're getting 93.5% of the actual cash value of the sale up front. So if you are selling your business, you're selling real estate or some other asset class, there is a way that you can really take advantage of this, kind of quote unquote tax loophole to achieve some of your goals. You're getting cash up front that you could ultimately invest in something else. We'll talk about a 1031 exchange here in a minute and how this differs from that. So when we're talking about this monetized installment sale, it has been around since 1999. I certainly didn't invent this. This is not brand new, but it's very little known in this kind of space, but it's going to be extremely relevant right now, especially with these cap gains tax hikes. So what is a monetized installment sale? So a monetized installment sale is a way of structuring the sale of an asset so that a cash equivalent or a large portion of that 93.5% is recognized up front, and you're able to reinvest that into whatever asset class you're looking at, and then ultimately you're deferring your capital gains for 30 years on that. So you will have to pay them, but you're not going to be paying them right now. This strategy can be applied to a wide variety of asset classes and is a compelling alternative to other well-known things like a 1031 exchange and deferred sales trusts. Under the Tax Reform Act and Jobs Act of 2017, 1031 exchanges can no longer be used for exchanging business assets. Exchanges are now limited to real property, and they have never been available for the sale on personal or even second homes. Also, exchanges are typically not the right vehicle for deferring capital gains taxes. Sometimes real estate owners do not want to buy into or exchange into another real estate investment. They want to get that capital up front and they want to put it into some other investment asset class. And this is what is perfect for that under this installment agreement. So let's talk about deferred sales trusts here real fast. They are frequently promoted as a way to sell an asset, particularly real estate, while deferring the gains. But these involve a significant amount of structure and costs, and they also have somewhat kind of hazy legal standings. Deferred sales trusts limit the seller's access to the cash, so the asset is not ultimately liquid. So for these reasons, a monetized installment sale may make a lot of sense for you if your end goal is to ultimately sell that asset and receive a large portion of that cash up front while deferring that capital gains tax. So a monetized installment sale combines an installment sale to a dealer who resells that to an end-using buyer for cash, ultimately with a loan from a third-party lender. Together, these transactions help the seller net 93.5% and defer their capital gains taxes at the same time. Think of that as a tax-deferred installment sale along with a tax-free loan. That's the best way to really look at this. And if you look at IRS code 453, that really outlines kind of, how this kind of gets baked in. But that tax code is important. So if you do want to do some IRS research, look at section 453 of the tax code. So this loan, ultimately provided by a third-party lender, provides cash up front and is made based on the assumption that the seller is going to be receiving these payments over the course of the installment payments over time. The terms of the installment agreement sale are typically 30 years, and the interest-only payments and the balloon payments are set up so that they ultimately cancel each other out. As a result of that, you're deferring the capital gains taxes for 30 years. You're receiving 93.5% of that cash up front for you to invest in anything else that you would like, of course. Again, guys, this is not anything new. You can look it up. This has been around since 1999. It's ultimately based on the financial advisors that I've talked to and my own research. It's going to become a lot more prevalent these days. So let's talk about who should consider a monetized installment sale. And obviously it's going to depend on your situation. First of all, you may want to get out of real estate. You may want to get out of your agricultural business. You may want to sell your business, and what you're ultimately looking for is as much of that cash up front as you will, whether to put into some other holdings or some other investment. Second of all, you may be considering a 1031 exchange, but you may have some worries that it may not ultimately go through. If you don't have another property to replace that within that 45 to 180 day window, you could run into some real issues there. And you would ultimately end up paying those capital gains taxes on your next tax return. So people that are going to like this are people that are looking to get that cash up front. They're looking to defer their taxes. A 1031 may be a little more risky for them if they can't replace that property. So this is something that would certainly be considered less risky than that. And this could give people more time to replace that property if they ultimately are looking at that 1031. 1031 exchange. Obviously, again, guys, this is something you want to do your own research on. So a monetized installment sale is something that's out there right now. You have obviously complete access to it. We're always going to recommend you talk to a professional, whether it's your CPA or your financial advisor, to do obviously more diligence to see if this is a good fit for you and your portfolio. Ultimately, it's going to boil down to what you want your exit strategy to be, if and when you want to pay those cap gains, if you want to push them or kind of kick that can down the road, which a lot of people are going to want to do right now. Something to take a really hard look at. If you like what you're hearing, you want more information, on things like this, please drop a like below. Again, that really helps out our algorithms, helps out our channel. If you're not a subscriber, go ahead and subscribe below. We're always looking to bring new folks into the channel that are like-minded and looking for more information like this. And of course, hit that bell notification if you want to get notifications when we bring out new and relevant content like this. Again, thanks for joining us, and until next time, make it a great day. Take care. Thank you.